The US and Europe give their 2 cents on how to commit to sanctions without causing a surge in oil prices. Or should I say they gave their 3 cents, considering the European Central Bank is following the Fed's lead and plans to raise rates to combat, you guessed it, inflation. And Ethereum dev creator Tim Bako says the test merge from Ethereum's longest running testnet to the ETH2 beacon chain was smooth like butter.
Smooth like butter.
My name is Frankie Candles, and this is your nightly crypto news wrap-up. Let's get it. The US and its allies are in a pickle, new pickle I should say, committing to Russian sanctions without causing a crisis for global oil prices. This week, Janet Yellen said the US is in talks with European allies to create a buyer's cartel and cap prices of Russian oil, limiting the profits for Russia. To stabilize prices, Russian oil will need to continue to be available to buyers like India and China, with a mechanism put in place by Western countries to restrict Russian revenues. The EU and the US have moved to ban Russian oil imports, but Yellen says that this could dramatically raise global oil prices. To solve this issue, the G7 is looking to use insurers to set a price cap, discussing the idea that insurance companies would cover Russian oil shipments to non-European countries only if the price cap requirement is met. US Treasury officials are traveling to the UK and other European countries this week to discuss their next move. Let's take a look at what Bitcoin's next move might be. Hey, Frankie Candles, what are the charts saying?
It's Frank, right? Thanks, man. Let's go ahead and do a little market watch here, guys. We've got Bitcoin coming in at $30,157, down about 0.5% for the day. Ethereum coming in at $17.95. Let's go ahead and check our top gainers. Helium, once again, in the top gainers, up 12% and 40% on the week. Killing it. VeChain up 6% and 4% on the week. Chainlink up 6%. Polygon up 4%. And last but not least, we got Theta up 4%. Guys, Bitcoin continues to range sideways we're at about a month of sideways action at this point. I think we're going to make a breakout or breakdown any day here. Lower time frames looking a little more bearish right now, but the longer time frames are looking bullish. So maybe we have a little sideways bearish action before getting a break up. If you guys are interested in trading, you can follow me on YouTube at Frankie Candles or at Frankie_Candles on all socials. Back to the news.
Thanks, Frank. We love Frank's TA. He's been spot on with some of the major price moves we've seen in the past few months. If you love this kind of crypto content, take a minute and smash up that like button. It's the best way that you can help the channel, and it gets more crypto content out to more people. Let's make understanding crypto go viral. The European Central Bank, or ECB, plans to raise rates for the first time in over 10 years. This comes after Eurozone core inflation numbers rose to 3.8% in May. Until now, the ECB has had a negative interest rate, with lenders being credited interest rather than interest needing to be paid out by borrowers. The good times may be coming to an end as the ECB announced plans to raise its key interest rate 0.25 percentage point in July, and then possibly again in September. From there, expecting a gradual but sustained path of future increases in interest rates. The ECB is seeking to end its aggressive bond buying program on July 1st as well. The moves are still being described as dovish, but the outlook is sending a more hawkish message. The ECB is preparing the market for a series of rate hikes until they can get inflation under control, which they forecast as jumping to 3.5% in 2023 and retreating to 2.1% in 2024. Not surprisingly, European stocks sold off following the announcement, with stocks Europe 600 pulling back 1.4%. This shift is showing how inflation is becoming a global issue, affecting advanced economies equally as we experience the same economic pressures. Lockdowns in China, the war in Ukraine, and let's not forget the printing of fiat currency that's backed by nothing, and government handouts during the pandemic. European investors are pricing in 5 quarter-point rate hikes by the end of the year. Ethereum came out with some good news on Wednesday, successfully merging its longest-running testnet, Ropsten, with Ethereum's proof-of-stake beacon chain. The test ensured that software running on Ethereum was stable and ready for final transition to proof of stake, with Ethereum Foundation's Tim Bako saying that the network is now stable and ready for what the Ethereum mainnet will execute this fall. When Ethereum moves to proof of stake, Transactions will be verified by staked Ether rather than energy-consuming proof-of-work mining. More test runs are in the works before the final rollout, with Gorley and Cepelina testnets still to be used, bringing the code closer to what will be used when the ETH 2.0 mainnet goes live. Next steps are set to be discussed during this Friday's All Core Devs call. It's becoming obvious that the world has a money problem, with soaring global inflation and gas prices running out of control. We're so tied up in the global supply chain, fiat currency is showing its true colors, while Ethereum is showing how reliable its blockchain can and likely will continue to be. That's why you'll see me putting my bets on crypto. That's all I got. Be blessed. Frankie Candles out.